$100,000 a year used to mean something clear. It meant you made it. It meant comfort, stability, options. It meant you were no longer worried about money in the same way most people were. But in 2026, that number has quietly changed meaning. Not because it's small, but because it creates a very specific kind of trap. A psychological and financial position where you earn enough to feel successful, but not enough to be free. And that gap is where people get stuck for years, sometimes decades, without realizing it. At lower income levels, the problem is obvious. You know you need more. You're aware of constraints. You feel the pressure. That pressure forces action. But at 100,000, the pressure disappears just enough to make you comfortable. Bills are covered. You can afford decent housing, a reliable car, regular food, some travel, some upgrades. Life feels stable. And stability is where progress often slows down because urgency disappears before strategy replaces it. You stop pushing as hard, not because you've reached your goal, but because things no longer feel broken. That's the first layer of the trap. Comfort replaces clarity. You're no longer asking, how do I build wealth? You're asking, how do I maintain this life? And those are completely different questions. One leads to growth. The other leads to maintenance. And maintenance is expensive. Because once your lifestyle adjusts to $100,000 income, it starts demanding that level just to sustain itself. Rent or mortgage, insurance, subscriptions, transportation, social expectations all scale up quietly. Not overnight, not dramatically, but consistently. And once that baseline is set, dropping below it feels like failure, even if it's temporary. Now you're not building from zero anymore. You're defending a structure. And defending a structure limits your flexibility. It limits your risk tolerance. It limits your ability to make bold decisions, like changing careers, starting something new, or stepping back to re-strategize. Because everything you've built depends on continuity. The income has to keep coming in every month at roughly the same level, or the system starts to strain. That's not freedom. That's dependency with better branding. The second layer of the trap is taxation and friction. At 100,000, especially in places with higher tax rates, a significant portion of your income is already gone before you even see it. What looks like a large number on paper becomes much smaller in practice. And yet your lifestyle is built on the gross number, not the net. So you feel like you should have more left over than you actually do. That gap creates confusion. You're earning well but not accumulating at the rate you expected. And instead of questioning the structure, many people try to compensate by spending more carefully in small ways, while ignoring the larger system that's absorbing most of their income. The third layer is identity. Once you reach a six-figure income, you start to see yourself differently. And more importantly, other people start to see you differently. There's an expectation that comes with that number. A certain standard of living, a certain level of spending, a certain image. And even if you don't consciously try to keep up with that, it influences your decisions. You choose slightly better options across the board. Slightly nicer places, slightly better services, slightly more convenience. None of these choices feel excessive on their own. But together, they raise your cost of living to a level where saving and investing become harder than they should be. And this is where the trap tightens. Because now, increasing your income doesn't necessarily solve the problem. If your behavior scales with your income, your margin stays the same. You go from 70,000 to 100,000 and your expenses follow. Then from 100 to 120 and again, your lifestyle expands to absorb it. This is lifestyle inflation, but at this level, it's more subtle and more dangerous. It doesn't look like reckless spending. It looks like reasonable upgrades. It looks like, I can afford this now. And technically, you can. But affordability is not the same as sustainability. The deeper issue is that $100,000 often keeps people in the employee mindset longer than they should be. It's enough to reward consistency, but not enough to create leverage. You're still trading time for money, just at a higher rate. And because the rate is higher, it becomes harder to step away from it. The opportunity cost of trying something new feels too big. Walking away from a six-figure salary to pursue something uncertain feels irrational, even if that path could lead to greater long-term freedom. So people stay. They optimize around the job. They negotiate raises, improve efficiency, maybe invest on the side. But the core structure remains the same. And there's nothing wrong with employment. The problem is when it becomes your only engine. At 100,000, you have the capacity to build additional systems, investments, side income, assets that don't depend entirely on your time. But many people don't do it because the urgency isn't there. The job is covering everything. There's no immediate need to create something else. And without urgency, action gets delayed. Not canceled, just delayed. Until years pass and the window where it would have been easier is gone. Another factor is time perception. At lower income levels, people think in terms of survival and short-term improvement. At higher income levels, they start thinking in terms of lifestyle and comfort. But what often gets lost is long-term positioning. Where will this path lead in 10 or 20 years? If you maintain your current structure, will you reach a point where your income is no longer required? Or will you simply maintain a higher standard of living that still depends entirely on your continued work? These questions don't feel urgent at 100,000, but they become very real later. There's also the illusion of diversification. People at this level often feel like they're doing the right things financially. They have some savings, maybe some investments, maybe a retirement account, and that's good. But if the majority of their financial life still depends on a single income source, they are more exposed than they think. A job loss, an industry shift, a health issue, any disruption can force them to draw down their savings quickly. And because their lifestyle is built around that income, the adjustment is painful. The way out of the trap is not to reject a $100,000 salary. It's to treat it as a tool, not a destination. It's to recognize that this level of income gives you leverage, but only if you use it intentionally. That means controlling lifestyle inflation, even when you can technically afford more. It means directing a significant portion of your income toward building assets, not just maintaining comfort. It means creating additional income streams, even if they start small. And most importantly, it means not allowing comfort to replace strategy. You have to stay slightly uncomfortable on purpose. Not in a way that reduces your quality of life, but in a way that keeps you aware that you're still building. That you haven't reached the end point yet. Because the moment you start acting like you've arrived, you stop doing the things that got you there. And at 100,000, that's exactly what happens to a lot of people. They arrive mentally, while still being far from where they think they are financially. The real goal is not to earn 100,000. It's to build a system where your income is not entirely dependent on your time, where your expenses are controlled enough to allow consistent investing, and where your financial position improves even if your active effort stays the same or decreases. That's where freedom starts. And that doesn't happen automatically at any specific salary level. It happens when behavior aligns with long-term structure. So the trap isn't the number itself. It's the false sense of completion it creates. It makes you feel like you've solved the problem of money, when in reality, you've only changed its form. Instead of worrying about earning enough, you start worrying about maintaining what you've built. And that shift can keep you in the same cycle for a very long time, just at a higher level. If you recognize that early, you can use a $100,000 salary as a launch pad. If you don't, it becomes a ceiling. A comfortable, respectable, well-paid ceiling that still requires you to show up every day to keep everything running. And the difference between those two outcomes is not the number. It's how you respond to it once you reach it.